Hello, welcome back to BJ. In the last video, we talked about cash flow statement, and before the last video, we also tried to explain income statement. And we said both are financial statements that you can use to know the financial health of an organization. Today, we are going to be talking about the third financial statement, and perhaps the most important financial statement, which is balance sheet. Balance sheet. So what is balance sheet? Balance sheet is a financial statement that shows the assets, the liabilities, and the equity of an organization. So it has two sides. The asset side, which shows the asset of an organization, and the liability plus equity side. So this side shows the liability on top and then the equity of an organization, while this side shows purely the asset of an organization. And balance sheet can be classified or unclassified. So if it is classified, it means that the assets and the liabilities are both divided into current and not current. The equity is always the same, you don't divide this, right? But if it is unclassified, it means that on the balance sheet you don't divide these two into current or non-current. You just write all the assets together and all the liabilities together, but most of the balance sheets are classified. And balance sheet is founded on a principle, a very simple principle, that asset is equal to liability plus equity. That is why it is called balance sheet. So this has to be balanced. All the assets of the organization must be equal to the liabilities plus the equity. So for us to understand this very well, we need to know the meaning of these three elements of a balance sheet. So what is asset, what is liability, what is equity? Asset is everything an organization owns. Everything you have as an organization that has economic value is called asset. So everything you can use to maybe build your product, to run your business, to make money is called your asset. Everything you owe to someone or to another organization or to anybody, anything you owe that they borrowed you, they lent you, right, and then you have to pay back to them, that is called liability. For example, loan or bonds, this is liability, because these are the things that shows that you have an obligation to pay back something. You have a debt, so these are called liability. So whatever remains after you remove your liability from your asset is called equity. This is what remains for you as the owner of the organization. And when I say the owner of the organization, it doesn't mean one person. It means maybe the founders of the organization, but also the investors, because everybody that has a share, that has a kind of stake, ownership in the organization, they are already the owners of the organization. So that is the whole concept of these three elements. So you may start to ask me that, well, how does balance sheet affect anything? What is the importance of balance sheet, right? I like to talk about the application of something, because I think that is the most important thing. How do you apply it? First, you use it to know the financial health of an organization. So by looking at the balance sheet, you can see the level of debt, you can see their current assets, you can see their long-term assets, you can see their equity, you can find the ratio between their debt and equity. From this you can quickly know the financial health of the organization. For example, if the organization has very high level of debt and they have low level of current assets, you can see that there's a problem, because current asset is the asset you can quickly convert to cash, right, in order to meet your short-term obligations. For example, inventory, you can convert this to cash quickly. So if they cannot quickly make money, they cannot quickly convert something to cash, to support maybe the running of the organization, or to meet their short-term debts or their short-term obligations, then there's a problem somewhere. They already have a financial problem, Secondly, you can also think about it this way, that A balance sheet can also show the financial performance of an organization over a period of time. For example, if you take a period of 5 years and you compare the balance sheet for every year for the past 5 years, you can see the trend of the performance of the organization financially, and you can use this to make decision whether the organization is becoming worse and worse and worse and poor, or they are becoming better and better and better financially. Also, balance sheets, perhaps the most important application is that you can use balance sheet to compare two different organizations within the same industry. So for example, if you pick the automotive industry and then you take the balance sheet of, let's say, BMW and the balance sheet of let's just say Tesla, let's just compare any, or maybe we say BMW and Audi because they are closer to each other. So you can see, their balance sheet, and you can use this to compare their current asset, their fixed asset, their liability, their equity, and you can use this to understand how they are performing, in order to understand also the who we have a bigger market share in the future, or the trajectory at which they are moving, right? And then you can use this to make decision on where to put your money, maybe to put your money as an investor, to put your money in this company, or to put your money in the other company. And also, as the owner of the organization, or maybe the management team, you can use balance sheet to see how your organization has been performing, so that you can make serious decisions to improve your organization. For example, if you see that you have low level of current asset and you cannot quickly make money, you may find a way to improve this, or you may, for example, convert some of your fixed assets to current assets, so that you can use them to meet your, short-term obligations, or to pay your debts, or to pay your bills, things like this, so that you don't run out of business. So those are the ways that you apply balance sheets in real life, for businesses. I hope you got value from this video. Thank you very much for liking my video. I know you will like it, so thank you. For those that have subscribed, I really want to say thank you, and for those that will subscribe right now, I want to say thank you. And for those that are still thinking whether they should subscribe, please subscribe to this channel. And also, I want to hear from you, right? What do you think about balance sheet, and what are your thoughts about balance sheet?